Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for June 28th, 2010. This is Patrick Ceresna. As always, we start off with the S&P 500 using that SPDR exchange traded fund symbol SPY. We were looking for last week was the rally to come to an end at some point at the upside of that retracement zone, which we marked off in the 111 to 115 area on the upside. Subsequently, we got a reversal last week that brought us right down to a very critical level right here around this 108 to 107 level on the downside, which is more or less a full retracement of the rally that we had over the last couple of weeks before this market downturned. At this point, this is a critical moment, and Monday and Tuesday will play a very important role to tell us how things play out here, because if we see some immediate selling come in on Monday, that takes us all the way back down to the previous lows around that 105, 106 focal point. The window immediately will open for a breakdown move that, when broken below those previous lows, would have us trade all the way down toward the 96 to 100 level. So that's certainly something that we're going to be watching for. But also we are seeing some stalling in here, especially on Friday. The price action had a chance to break down, but the bulls really dug in and held this area. If we on the other hand see these support levels holding, especially on Monday and Tuesday going into the early part of the week, we could theoretically see a good strong counter rally again come in before a breakdown move. Any counter rally would create a zigzag pattern to finish another top end move towards the top end of a flag, and so therefore we could still see one more full push up toward the 113 to 115 area on the upside, and then subsequently break down. So which of the two scenarios plays out will all be dependent on how Monday and Tuesday plays out. I want everyone to watch whether or not that 107, 108 level really digs in and holds and contains everything in the first couple of days, because if we see any move down toward the 105, 106 level on the downside, it becomes a diminishing probability that this is going back to the top side like drawn on here. But again, if we see that, let's say a good strong 20 S&P point rally, 30 S&P point rally coming in over Monday and Tuesday, then we could see a move all the way to the top end of the range before a breakdown in mid-July. Next here, I want to take a look at the ISE U.S. Regional Banks Index, which is a symbol JLO. We saw last week bringing in some selling right to the 2350 to 24 focal point below, and subsequently we've seen a nice Friday bounce that reversed it to the upside, just like that flagging formation on the S&P. If we don't see any selling coming in on Monday and Tuesday, and especially if they are able to rally the markets and particularly the sector into Monday and Tuesday, we could see a move that comes right to the top end of this 25 to 26 area on a flagging formation that pushes up into that zone and then subsequently breaks down. So at this stage, again, depending on the way we see the S&P playing, we probably are going to transpose that and expect the same type of chart pattern to develop on the regional banks. In the same regards, if we, let's say, see selling come in first thing Monday and Tuesday, and especially if it breaks below the 2350 area and the 23 area on the regional banks, we would then be looking for a move to come all the way down to the 20.5 to 22 area on the downside. But those downside targets would only become in play if we see the initial breakdown moves to indicate that the move is actually underway. Next here, I want to take a look at the ISE Syndex, which is the symbol SIN. This is an index of all the casino, tobacco, and distiller companies. Really, at this juncture, we're seeing, again, almost identical chart price action. We saw some aggressive selling, but some stalling right at key retracement areas around this 108 level on the downside. Really, at this stage, if the whole market is going to have that bounce this week, then we could see that Syndex work its way right back to the top end of the range in the 113, 115 115 area, but there are some measured moves that indicate a move that could go even as high as the 116 plus area on a very short-term push, but we don't anticipate this to be anything more than a counter rally higher if the broader markets are participating in the same move. But in the same regards, if for whatever reason we find the Syndex trading right in that 104 to 106 area on the downside, especially if we see some aggressive selling coming in early this week, maybe on Monday or the Tuesday, and we see that come right back down to that 104, 106 level on the downside, it would open the window for further selling. We're not going to really be pushing that thesis too much until we see real technical damage, but any break of the 104 level on the downside would have a very quick move focused on all the way down toward the 96 to 98 area where the previous lows came in February. Next here, I want to take a look at the ISE Home Builders Index, which is symbol RUF, and there's been some very strong relative weakness in the Home Builders Index versus all the other indices. And even while the other indices have been able to muster up some reasonable counter rallying, the Home Builders have not, but they have at least held support. This 875 to 9 area, kind of condensed and down by 25 cents, has really contained almost all selling. If the broader market ends up being able to muster up a counter rally, we could see the Home Builders bounce off of this level, but I'm not looking for any robust price action here. If the Home Builders makes a counter rally higher with the broader markets, it would probably be no better than the 9.5 to 10.25 area. There's a massive congestion area there from January, February as well. The highs that came in a couple weeks ago and the lows that came in May all kind of correspond in that zone. So it would take a real catalyst, some sort of a major announcement in the home building sector to really push it above this area. So really anybody that's in this area here and wants to get out any rallies up into the zone, it would be probably not a bad place to take some of the position off the table. Next here, I want to take a look at the ISE Natural Gas Index, which is symbol FUM. This is the opposite of the Home Builders. It had some very good relative strength and was able to counter rally very robustly right up to the higher end toward its range, and really last week brought in a good profit-taking cycle, but actually fits the perfect retracement prototype down into this 96 to 98 level. Again, if the whole market bounces, not only can these natural gas index return back to its previous high, but could theoretically actually even push back to its previous highs all the way up at the 115 to 117 area on the upside. The only way we would start to be far more concerned about the technical circumstances in the natural gas index would be any legitimate breakdowns below this 96 level. So you can see that we're sort of at a critical point here. So long as the bulls can dig in and hold natural gas above this support line where we're at, then the window's still open for natural gas to do very well. But if we see any breaks below 96, then we have to start considering a number of other scenarios, including not only a retest of the 89.91 zone, but whether or not we may have further weakness down into the 84.86. But we're not going to play or consider those scenarios until we see a breakdown. Finally, I want to take a look at the ISE Mini FTSE 100 Index, which is the symbol UKX, and the London market has been relatively weak versus the broader markets. We were looking at a number of scenarios last week, particularly we drew out what we felt was the retracement zone that would naturally fit the FTSE on the upside. Subsequently, we were looking at this flagging formation that developed right here in that sideways formation, and we have lots of signs that this FTSE wants to break down. Very weak index, so it's one that you would want to short if the whole market was rolling over. But really, in the end, we haven't seen any major currency moves over the last couple weeks. So if the S&P and the broader global markets decide not to break down, it would be very unlikely that the FTSE would do the move on its own. So really, if the S&P is holding support lines and breaking higher, and there's no dramatic currency moves to support either move, then the FTSE should hold this 500 to 510 area. But in the same regards, if the S&P starts breaking down and we start seeing the European currencies in general starting to weaken again, then the window would open up for this flag to break down and have a move all the way down to the 440 to 465 area on the downside. Again, we wouldn't be looking for this breakdown move unless we saw the global markets reacting on the downside to there. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.